Are you guys seeing my screen? Hope you are seeing my screen.
Yes, you are seeing your screen.
All right. So this buy setup that I took yesterday, and it is in my trading time. My trading time basically is 3:30, 3:30, 3:30 to 10 o'clock, or most time 10:30. Max is 3:30 to 4 o'clock. Max 5 o'clock. I'm done with everything. What is that same time is 9:30 in New York time, because I set my time to New York time. How do you do that in TradingView? If you come over to this setting, come over to where is that stuff? If you come over here, you will see UT5, which if you click, you see my time is set at New York. We have Lagos time. If I change it to Lagos time, this is our time, Nigerian time. You see what I was explaining to you guys. This is exactly 3:30, 15 hours, 30 minutes. That's 3:30 p.m. So my trading time is within this time to mostly 5 o'clock. Do you understand? This is my trading time. I don't play with this time. It was just that there was something crucial that came up. I could have execute and finish everything by, this is 4 o'clock, 5 minutes past 4. But I thank God that it didn't come and stop me out. It still went back to that TP, because this buy side here was my target. And look at our price. Watch this. Exactly that point I went out. So what am I trying to say? This is an example of low resistance liquidity run. In other words, it does not struggle with you. The market is not struggling. It's doing exactly the same things I want to see the market do. The market is following my instruction based on my experience in this market. Do you understand? So example of low resistance liquidity run is this one. Once you enter, the next thing you want to see, highest 2 minutes, you see it. The next thing you want to see your market move in profit. Why? Understanding liquidity, because liquidity is very important. Liquidity and inefficiency. I think I should explain that the reason why I take this straight. Although I have a video concerning that, but I should use this time and explain why. One thing I do is firstly I go to my 15 minutes time frame. Now watch this. In this my 15 minutes time frame, when I came to the marketplace, first of all, this is how the market is. This is the marketplace. First of all, if you observe this low, this is an example of single low liquidity points. I marked that this low now. Hope you guys are seeing. You are seeing, right? This low. I marked that. I watched how price react there. As you can see, it came and sweep this low. And inside that low too, there's also a fair value gap. There's this candles high. This candles high and this candles low.
Hello?
Right?
Hello?
Please mute your mic.
Hello?
Who is that? Mute your mic.
Hello? Njenna.
Chooks, mute your mic. Chooks. Okay, sorry about that, please. Sorry. So if you observe this 15 minutes candle, there's also a fair value gap. That is two confluence at the same time. First was the low that was formed here. Second, there's also a fair value gap in there. So the next thing I want to do, when I see these points, these are PDRs, points of interest. Do you understand? Every liquidity point is a point of interest. Every fair value gap is a point of interest. So once I saw this low and also this fair value gap, I head over to my 1 minute time frame. The next thing I want to see is change, break of structure. Now watch this now. Inside this, my trading time window. Look closely. Look closely. Now, you see, this low was formed before 3:30. and this low was now swept. And look at how price reacts. The most important thing is once a low is swept, the next thing you want to see is reaction opposite the direction of the low. Do you understand? It's very important. First, once the low was swept, look at how price reacted. This pin bar, the next thing I was looking at where my eyes was this high. Have you seen this high? Once this low was swept from this high, it swept. And the next point that was very important to me is this high. There's also a high for me, but this one is so obvious. So I picked this high. I picked that high, waiting for price to break and close above it. You see this candlestick break that highs and close above it. This created a fair value gap. This fair value gap, that's this candle's week's high. This is the second candlestick. Remember, fair value gap is a triple candlestick pattern. Then the third candle is this one. So once price created that fair value gap, I in fact draw that out. That was the reason for my entry. First, they draw on liquidity on the 15 minutes time frame and the fair value gap. Liquidity was swept in the 15 minutes time frame. The next thing I head to my 1 minute time frame. The next thing I wanted to say displacement. That's sharp movement away from that liquidity. And that is what you saw all this green candle did. It breaks structure. This is breaking market structure right here. Boss, breaking market structure, created a fair value gap. I'm telling you guys, this is what Nasdaq does every 7 out of 10 times. This is the same setup you'll be seeing within this time. I've traded this thing. This thing I'm just showing you, this fair value gap theory. I've traded it. This is 3 years now. It has been working consecutively. So you see this works out. Once it moves, you're already confident. Where will your stop loss be? You can either keep it at this low or keep it. This is down candle, which is what we call order block. This order block. This is another block. You understand? It's either you keep it at the low of this swing and target. This is minor buy side, or you target this one as it, which in fact price move swept that minor buy side. Tap it there. You notice price tap there.
And please also,
Yeah.
and please show us this where you place the stop loss again. I didn't catch that place. The stop loss.
The most conservative way to place stop loss. Conservatively, you can place your stop loss at this low. Do you understand? This is a breaker. High, higher high, it breaks down. You can place your stop loss at this low. But this how me I view this market. Most times, if I see this type of week, this rejection, this is a nice point. I'll take 50% of this and place my stop loss there. Why? I'm trusting the market not to come back. But normal way to place the stop loss will be here. But I'm taking 50% of this week. In the future, I will explain why I'm doing that. This and that black candle is also what I'm looking at. When price is straight, this price movements now this week, which people call pin bar, is showing me that price has already done everything in this low. It has finished all this, what we call, it has grabbed all the liquidity here. So there's no reason why price should come back here. I mean, the half points of these weeks. Do you understand? Or another way to be highly aggressive, the best way to be aggressive. You see this candle number 2 of this fair value gap. This is candle number 1, right? Candle number 2 and candle number 3 that forms this fair value gap. Woodward, are you seeing that? Are you seeing this candlestick? Yes. The low of this candlestick now is the professional way of placing your stop loss. That's this is price in Nasdaq. I don't mean currency pay. Highly, when once this type of breaking market structure happen, it will be hard for price to break and close this candle number 2. But if you are trading currency pay, it will sweep the hell out of you before moving. But 90% of the time, 90% of the time in Nasdaq, price does not operate that way. I've traded Nasdaq for so many years now. Price does not do that. Once it creates a fair value gap, it must target at least minor buy side before coming back to that fair value gap. Do you understand? So this is the simple thing I want you guys to, and you see it moves back here. Do you understand? And came back. Notice I want to show you what price really come back to do. That was what, when I came back, I saw price here. Do you understand? I noticed, you see this aggressive 2 down close candle. Are you seeing these 2 candlestick close? Guys, are you with me?
Yeah, yes, we're with you. We can see the candles.
Yeah, these 2 candles now did something, because we have basically 4 types of liquidity. We have single highs and low liquidity. We have equal highs and low liquidity. We have structural liquidity, and we have trend line liquidity. This is an example of equal high lows liquidity. You see this low is relative equal to this low, and it's also relative equal to this low. That's an example of what I used to annotate equal lows, relative equal lows. So this down candle came and pierced, because people, retail trader, will see this as potential support or double bottom. Why? Immediately this candlestick, this engulfing candlestick was formed, and there was a support zone here. People that are trading retail garbage, I kind of retail setup, will see this thing as double bottom. Are you seeing that? Because of this engulfing candle, it simply means, how will they trade this? They will, once this candle close, this green candle close, they will place their buy order, keep the stop loss just below there, targeting these highs. Do you understand? And see what the market did. It came back, sweep them, clear that liquidity, then move to the upside. You see that aggressive move to the upside. Why? Price can only move when it has taken out liquidity. Price will only move well when it has taken out liquidity. In other words, when it has, for example, if you are buying, price can only buy when it might have seen who to sell for or buy from. Do you understand? This person that buys this place. I want to use a simple analogy to explain. When somebody buys it, he's keeping his stop loss. It simply means he's telling you that, okay, I might sell here. You buy something from somebody that is willing to sell. That's how this market is. So when somebody executes buy order, he automatically is telling you that I want to sell my US NASDAQ here. So price will come and buy from them that are selling in this place, which you call stop loss. That's why you see this order I bought here and I sold here. I was in profit because I sold at higher price. But had it been I bought here and sold below, I would have taken what we call stop loss. But I'm still buying and selling. So somebody that might have bought here, kept his stop loss here, price came and bought from him. He sold here to price because he was looking at this relative equal lows as support zone. So the best way to trade this market is when you discover where people are buying, are willing to sell for you at a cheaper price. That's the essence of, you see now, somebody might have seen this rejection and bought here. It came back, it stopped them out. Then you now see our price move well. Came back, give us an entry to the buy side. So what am I trying to say? Liquidity point is very important. But in this strategy I'm showing you guys, this thing is what you are looking for inside a fair value gap. What are you really looking for, guys? This is, I want you guys to go and do homework. This is what I want you to be doing. Every bullish movement, for example, a bullish fair value gap, this is like an example, an assignment. I want you guys to be dropping it in the group if you are done with it. This is a bullish movement. Now, this is a bullish candle, right? Now, see what I want you to do. That's candle number 2. That's candle number 3. We say fair value gap. This is fair value gap. Fair value gap is a triple candlestick pattern in which the high does not overlap with the following low. For example, now in this candlestick, now these highs and this low is what we call a fair value gap. Do you understand? So I want you from now, every time, this is like a rehearsal to you now. This is what I want you guys to be doing. That's fair value gap. And I abbreviate fair value gap as FVG. I want you to go to your chart. Anything you trade, I don't know what you trade, but any currency pair you trade, Like me, I trade NASDAQ. I love NASDAQ. I don't play with NASDAQ. Do you understand? I love trading NASDAQ. Then once you see your 15 minutes, go to your 15 minutes chart. Check this thing. Once you see this fair value gap, this is the setup I want you guys to be raising. The most important, why you need to be doing this every day is that as you are doing it, it become conversant to your conscious, subconscious mind. Before you know, you'll be seeing it. It will be popping out of the chart. If you are doing this consistently, go to the 15 minutes time frame. Look for, first of all, identify the trend. If it's an uptrend, good. You look for fair value gap. Once you see a fair value gap, what I want you to do is that once any price comes back to that fair value gap, like now another candle is formed here, the candlestick begins to do something like this. Oh, what's that? Sorry about that. Okay. So when another candlestick forms, for example, this is an uptrend. Once it comes back here, you will see something like this. Once the price comes back here, it over to the 1 minute time frame. Now, what I want you to, you will notice in the 1 minute time frame, you will see a potential downtrend making higher high and higher low. What I want you to do is wait. Once any break of structure, anytime you see break of structure, the next thing I want you to check in that 1 minute time frame is fair value gap that breaks that structure. Use that as an entry and go to the upside. That is what I want you to be doing every day. Do you understand what I'm saying? Guys, are you?
Yes, sir.
Yes, sir. Yes, sir. We understand.
That is that is a strategy I want you guys to be conversant with. It works, fellows. This strategy is 70%, especially if to NASDAQ that I've been trading it with, and sometimes BTC and gold. But NASDAQ, I'm sure of it. 9:30 to 10:30, you will always see this setup. At least, for example, if we have 5 trading days, you will mostly see this thing at least in that week 3 times. 3 times you will see it. Let's say you can manage your loss. If you have 3 out of 2 winning days and you are maintaining the same loss size, the same capital risks, you find out that you came out of that week profitable. Then another thing I want to tell you guys, please, about this trade. Trading is hard and it's also simple. Why is it hard? When you are just expecting everything, all your emotion, all your thoughts, you are putting it in this chart. You are sitting in this chart 247. You have analysis paralysis. What do I mean? If everything all your hope is in this chart, every time let this trading pay me, it will not pay you. Do you understand? But if you are seeing it as a kind of investment, whereby you come into the market, we have London session that is 3 hours. That's 8 o'clock, 9, 10. London session is over. You sit still. Open your 15 minutes time frame. Don't look at, just follow me. Use this strategy I'm telling you. Open your 15 minutes time frame. You are waiting. Please, within that time, you want a fair value gap to be created in that your trend. For example, you open to a 15 minutes time frame on your London session. You are waiting for a fair value gap to be created in your 15 minutes chart. You sit still. You don't want to know anything. If price let it move aggressive, it does not concern you. First, you are just sitting quietly, waiting for your 15 minutes fair value gap to form. Once you form, the next thing you are waiting, you are following a rule-based idea. You wait for, will price come back to that fair value gap? If it comes back, you head over to the 1 minute time frame. Once you go to the 1 minute time frame, the next thing you are waiting for, breaking market structure. Once there's breaking market structure, like this kind of scenario, the next thing you are waiting for is price willing to come back to the fair value gap that is created in that 1 minute time frame. Do you understand? If price came back there, good, boom, that's your entry. These things I'm telling you is step by step. Simply means that there are some days you sit down throughout your session of trading, no fair value gap was created in the 15 minutes. What will you do? Nothing. Sometimes fair value gap was created. Then you wait for it to retrace back to the fair value gap. You check, it did not do. What will you do? Nothing. Do you understand me, guys? Okay, it went back and retraced back to the fair value gap that was created. It did not break structure. What do? You do nothing. Okay, it created a fair value gap. It came back to the fair value gap, created break in market structure, it did not create fair value gap. What do? You sit still. Okay, it created 15 minutes fair value gap. It came back to the fair value gap, break structure, created 1 minute fair value gap, but did not come back and enter the 1 minute fair value gap. What will you do? Nothing. So you now see that there are most time you can sit in your trading session just to do nothing. That is what makes you a professional trader. Your ability to sit down for 3 hours, your role did not play out well, and you did nothing, makes you a professional trader. Simple. Guys, are you hearing me? Are you with me?
Yes, I'm here.
What makes you a professional trader is that you were sitting down in the marketplace for 3 hours. Your trading strategy, your written rules did not come to fruition, and you did nothing. You were not motivated by your dopamine did not hit because of how aggressive the market was. You were just sitting still, waiting patiently for your setup to form, and it did not form. That is what professional trader does. Do you understand? Otherwise, you'll be chasing price, looking for how this market will give you $10,000. Before you know, you'll be blowing accounts upon accounts. Forget about all these fake gurus. They say go big, go. It's a lie. It's a fallacy. That's not true. This is a business, and you must treat it as a business. Not every day you sell in your business. There are sometimes you have lost. It does not make you a bad trader. Don't allow that to enter into your psychology. Don't allow that to make you feel bad. It was not a winning day. So what? You took a loss. So what? But if you take a loss, you say, okay, I must get in. Before you know, you want to revenge and regain. Close your chart and go. That was just that day. Do you understand? There's other days. You understand? So you take a loss. What did you do after you take a loss? Were you still targeting, I must, then get ready. Your account is going. So these are simple setup that if you can focus on this alone, if you can just focus on this alone, I tell you, you will see that your trading will be easy. And the most important thing is once trading, this is a nice setup. This setup alone can make you good amount. Most of you can pass prof firms with this. You can trade. That's why I advise you guys, as you are learning this, if you want to start trading, use Sense accounts. Yes, I drop a link in the group about Sense account. For example, now if you have $10, if you have $10, this $10, each $1 is equals to 100 cents. So if you have $10 and you are funding Sense account, automatically that is 1,000 cents. And if you are using this on Nasdaq, it will not be much. If you trade 100 cents and you are taking small, you find it that before you know, you can double this 100 cents to 200 cents. Do you understand? Why? You are using Sense accounts. But if you want to fund your real $10 account, just to trade, please mute you. Ikerete, Erica, mute your mic. Okay. So what are we saying? If you use that, it will now reduce the amounts of risks, and you will be balanced. So guys, the most important, this is what you'll be seeing me doing this every day till it becomes part of you. This is what I want you guys to be doing. I think I will reduce my gym schedule so that I can be on the chat with you guys every London session, so that you'll be seeing this playing out every day. Every day, these things works. Every day you'll be seeing this. Market does not respect your support and resistance. market is looking for either inefficiency or liquidity. That is what moves the market. Inefficiency in form of fair value gap, which is the one I'm primarily going to be teaching you guys throughout. So please, it's very important that go back to the chart, try and do this, send it in the group. I want to see you guys. First of all, identify the fair value gap, draw it out first, screenshots, send it to the group. See when it retraces back, what did you see in the lower time frame? Was there any break in market structure? Was there any fair value gap created? Okay, you use that as your entry. Use this as your, if it was buy, use this indicating your fair value gap, or in your 1 minute fair value gap, indicates this, something like this in the chart. Like this type of trade. Now, I just want you to, this one was our 15 minutes fair value gap. This one right here. You still remember? Let's go back to 15 minutes fair value gap. Okay. So you saw this 15 minutes fair value gap is here, and the sell side liquidity, the low here. So I want you to, first of all, you mark that. You mark that. I want you to mark that. You mark 15 minutes fair value gap. You can even write it out. For example, you write something like this. You write something like this. Write 15 minutes fair value gap, so that when you come over to the 1 minute time frame, it will still show. Then you go over to the 1 minute time frame. When price came back, was there any break in market structure? See, I want you to be doing this. This is 15 minutes fair value gap. Then you see how price came back, break this structure, break this breaking structure. Make sure you're using a breaking structure that it cannot close above and create a fair value gap. Because if you're talking about breaking on market structure, why didn't I use this one? Look at, because this one, literally, this is a low, this is a high, this is a sweep in this, and this one was broken. But if you notice this breaking market structure right here, listen, I want to show you guys something. The wick was the one what breaks it. And secondly, it did not tap yet into the 15 minutes fair value gap. Are you seeing that? This breaking market structure, first of all, the wick broke out, but it did not enter into the 15 minutes fair value gap and the 15 minutes previous low. Do you understand? It was this one that tapped in, and this one candlestick break above these other ones. So these are the things you need to know before you now use this as your entry. It will show me where you could have entered right here. Keep your stop loss. Either you want to use this one, or you keep your stop loss right below here, targeting your normal 1:1. This. Do you understand? This is what I want you guys to do. Show this clear breaking market structure. Do this and post in the group. This is your assignment. Hope you guys understand. Is it clear?
Yes, boss.
If you understand the assignment. Odwal, you understand, ba?
Yeah, we understand.
Yes. Ashat, Adamu.
Yes,
Ashat.
yes, sir.
Okay.
Yes, sir.
Boss. Yeah, I understand.
Enrique, what of you?
Yes, sir. No, not the long one. Sorry.
Oh, you just came in late. Okay. I think I will post. See what will happen. I will post. I've recorded it. I will post it probably in my YouTube channel. Then you can go watch it again so that you understand. Erika, you understand what I'm saying? Yeah, I've recorded it. I will post it in the. I will drop the link in the group. Then you can watch it again so that you can do the assignment with others. So I think our next class is supposed to be tomorrow, or probably this evening. I hope this was insightful. I hope you understand everything.
Yes, sir.
Please do have a good day. All right, this is where we'll stop.
Okay, sir.
All right, bye.
See what you have done to upload. Pack all this grid into the back.
All right, well, let's this thing.